We can all feel it right now. That's one thing I'm pretty good at. That nobody really knows what's going on out there. Everybody is absolutely cooked. The ceasefire, it's on, it's off. There's a meeting in China. There's interest rate confusion. Oil could be at $65 in a month or $150. I don't know. There could be a rate cut super soon, or there could be rising inflation expectations and we're going to have to hike into the future, or liquidity is going to go up or it's going to go down, or Trump's going to tweet something, or somebody's going to have a viral piece of content that shifts the narrative. And there's you sitting there at your computer trying to make good, clean decisions amidst all of this chaos. So if you're feeling broken, like if you're feeling like you're hesitating on every move, or you just don't know what is going on and nothing is working, it's not just you. You are not fundamentally broken. This is just what it feels like to trade in a market that has no clear direction, that has violent rotations and whiplashes into and outside of ranges. And most of the trading education and content that you've consumed have probably not prepared you to navigate through these waters. So by the end of this video, I'm going to give you a framework on how to better shift your way through these uncertain times, how you can function when you have no idea what is coming next. Because by the way, that is not a temporary problem in markets. That is, in fact, the game itself. And the sooner you build for that, the better off you're going to be over the long run. By the way, I'm James. I've been trading for 13 years. And I have enough experience to know that uncertainty is not actually the thing that eventually ends up killing traders. It's just simply how they respond to it. And here's the thing, most people are going to fall into the trap right now. See, like when a market is trending, when there is clear direction, you do feel like you can understand the game. Your thesis is working. Your conviction is building. You take the trades that make sense, and well, a lot of them just work out because the overall tide is carrying you along. But then something shifts, something else happens. War, policy chaos, things shifting back and forth in every direction. And all of a sudden that clarity you had, that confidence, poof, it's just gone. And instead of adjusting properly, most people do one of two things. They either freeze, which means they just stop trading entirely because, well, nothing feels safe. Every setup feels like a trap. And they tell themselves they're being patient, when in reality, they're just scared and clueless. Or two, they force it. They just keep doing the same thing repetitively that they were doing beforehand. Same size, same setup, same expectations. They get chopped to pieces eventually because the environment changed and they didn't. And both of those things are reactions to the same thing, the discomfort of not knowing. But yoo-hoo, guess what, man? You're never really gonna know. Not in this market and likely not in the next. The stretches that did feel clear, well, you were probably lucky enough to kind of be on the right side of the trend. That clarity was more of an illusion, whereas uncertainty is actually more of the norm. So if your entire process depends on having a strong opinion about what's going to happen next, you're going to be in big trouble every time the market starts to get messy, which, by the way, is a lot of the time. So the traders who actually thrive in these environments, they don't operate on prediction. They operate more through response. They're not going to sit there and ask what's about to happen. Rather, they're asking what is happening right now. What is the market actually doing? What is the tape telling me? Not what should it be doing or what the headlines are trying to tell me, but what is it actually doing? How is it moving? Is it trending in a direction or is it chopping? Are the breakouts following through or are they violently reversing? Is volume coming in the back and confirming moves or is it slowly drifting away and getting super thin? Where do the relative strengths lie? Where is the weakness? What is holding up and what is absolutely falling apart? None of those questions require you to predict some outcome of a war in the Middle East or some negotiation or some policy shift by the Fed. They just plain require you to observe. And simply being able to observe is one of the most underrated skills in all of trading. So practically speaking, what does that look like? Well, first of all, you need to shrink down. When your clarity is low, you need to be reducing your size as fast as you can. This is not the time to be swinging for home runs. This is the time to be poking, prodding, probing, testing, taking small bets to try and feel what is working and what isn't. Your job in uncertain markets is not necessarily to be making a killing. It is more to just stay in the game and gather information. You're like a scout going ahead of the infantry. Every small trade you take is giving you a little bit more data. It's teaching you something about the current regime you're in. But it's only teaching you if you're small enough to gain information from it. Because if not, you're going to be in fight or flight mode, in survival mode at all times. Next up, you got to shorten your time horizon. Because the further out you look in a market like this, the less reliable your read is going to be, right? Your macro calls might not matter in a violently rotating short-term market. Even swing trades, which you might see as short-term, can get whipsawed by some tweet that comes out overnight when you're sleeping. So pull in tighter, trade what is in front of you. Act more to the tape than the narrative. So normally if you hold your trades for maybe a day or two or a week, maybe it's time you're going to be getting in and out in the same session. Maybe normally if you swing trade or whatever, it's just time to sit on your hands and wait for something to actually fall in your lap. There's absolutely no shame in reducing your time horizon when the environment calls for it. That is not weakness, that's actually adaptation. More so, start to lean on relative strength. Combine that with finding the things that are really weak instead of just sitting there trying to pick tops and bottoms. In a chaotic market, the things that are holding up well are trying to tell you something. The things that are falling apart are trying to tell you the same. Relative performance is real information, even when the overall direction is messy. Follow the money, man. Where is it going? Where is it leaving? That's much more reliable than some thesis you're going to come up with that could reverse by lunchtime. Now, next, set some levels and let the markets come to you. This is going to be more of a limit order environment than a going to market one. In these messy markets, the person who chases is the one who dies. You're going to get filled at the worst possible moment, and the market will turn around right when you get in. Instead, define your levels. Define where you are okay with getting long or taking a short. Set those orders, stick to them, even walk away if you need to. If it gets there, great. That's the plan. If not, no big deal. Continue sitting on your hands. That discipline to wait for the market to come fill your orders is one of your biggest edges amongst an environment like this. Last, I need you to protect your mental state as much as you possibly can. This comes above everything else, to be honest. Markets like this are exhausting, and the headlines can be relentless. The swings are violent, your P&L is going to be moving all over, and your nervous system is going to be running hot all day. So if you are not actively managing your mental state, the market will manage it for you, and it will definitely not be kind about it. So step away, take more breaks. Don't be kind of refreshing your phone at midnight. Don't doom scroll through Twitter looking for that next catalyst. Manage that informational diet. Make sure you are checking your sources a couple times before relying on it to make a decision. Then as quickly as you can, go back into your process. The ones who come out of these stretches in a good place are not the ones that have been heavily glued to their screens 14 hours a day or over trading. In fact, it was the ones who knew that it was the right time to pull back and disengage. Let me just sum it up for you. You are never going to trade in a market where there is complete clarity. That market doesn't exist. And the ones who build to be able to actually execute in a market that is perfectly clear are the ones who are going to get stuck every time it gets messy. Let me say it this way. The actual edge is in not knowing what comes next, if that makes sense. It's in fact being able to operate specifically when you don't know. So shrink your size, shrink your time horizon, look for relative strength and weakness, set some limit orders, use your levels, and protect your head. Clarity will eventually come back. It tends to. But your job is to make sure you're still standing when it finally does. All right, thanks for tuning in, guys. Please, if you'd like to join the private Discord, it's in the link below. Otherwise, you're going to see me start to be live streaming a bit more. So make sure you tune in, come hang out, ask questions. This isn't financial advice, it's just for entertainment purposes only. Catch you on the next video.